Hi, my name is Rob Sowerby, and I offer the FM paper on the FME platform. What I've got for you here is a sample of the sort of thing that I do on the teaching side of the platform. So you've got a 5-minute sample of a longer 25-minute video relating to an overview of working capital management. I hope you enjoy it. Now let's look at some numbers. We've got a working capital overview here in terms of a balance sheet, and the requirement is pretty simple. Assess whether the company is overtrading. So we're given some profit and loss information at the top, and then we're given the balance sheet in terms of non-current assets, current liabilities, and non-current liabilities. Notice at the bottom, I've given you a net assets figure. So a quick reminder of what we're looking for. We want to look for a growth in sales, liquidity ratios, an increase in sales to net assets, whether the payable days are increasing, and whether the cash balance is falling. If we were to look at sales growth, all we have to do is to consider the revenue. So if we take this year's revenue, 24 million, divided by last year's revenue and minus 1, we will get the sales growth. In this case, 33%. So we've done a bit of analysis, bang, 1 mark, and we may say something like this. Sales have grown by 33%, suggesting that the company is at risk of overtrading, because such rapid growth in turnover is likely to increase the level of working capital funding required. Notice, we've only been given a few numbers, so I use the term suggesting again and again because we have to try and look at gaining insight from the number. Okay? Also, I've used the word rapid. Yes, now that's a value judgment. It suggests that instead of just saying it's gone up quickly, and maybe that's more of a concern. Then we can look at our revenue to net assets. So we've got our revenue at the top, we've got our net assets at the bottom, and we see that revenue to net assets has gone up. If you wish, we are sweating the assets more heavily, we're getting more out for a given level of assets. And from a funding perspective, this could be a concern. So here we go. I've shown the examiner I can do some numbers, 1 mark. Then the level of activity has increased more quickly than permanent funding. Yes, so that was revenue to the permanent funding net assets, suggesting that the company has not fully funded growth in working capital needs with permanent funding in the form of additional equity or long-term debt. Your examiner loves that sort of thing. We've got suggesting, we've got some sort of insight as to what it means. I think that's enough. Then we look at our current ratio. Now, we've seen how we calculate it, current assets to current liabilities, liquid assets to current liabilities, using the values that are highlighted. Once we've got those, we could say something like this. Liquidity has declined substantially. Interesting. A value statement, substantially. It's a big change over the year. Particularly so in terms of liquid assets. So I'm pointing the examiner to the numbers I really want to talk about. The level of liquidity is now quite low, value judgment, compared to established safe levels, 2 and 1, and may suggest the company is overtrading. So I'm getting a little bit more firmed up here as to the fact that it's possibly overtrading. Payable days. We calculated these before. We see that payable days have extended from 53 days to 71 days. 18 days. This is what I said. I show the numbers, 1 mark, and then I'm getting 1 mark for my comment. The company is taking on average an additional 2 weeks to pay. Well, it's a bit more than 2 weeks, isn't it? This may suggest, bang, remember, insight, that the company is having difficulties in paying its bills as they fall due. Do we know that as fact? Well, the answer is we don't, but we've got to say something. And then I've gone even further and said, this is suggestive of overtrading. Cash position. Now, we can't see them behind this, but we started with a cash balance of 1.5 million and we ended with an overdraft of 1.2 million. Wow, this looks like it's the smoking gun. The company has seen a sharp fall, value judgment, in the level of cash and must consider how close it is to any limit on the overdraft the bank is willing to offer. A critical point. This is suggesting that there is sufficient permanent funds to cover the increase in working capital needs. So if overtrading arises in the exam, and it's a relatively infrequent question, it's going to arise for a fair few marks, 8 to 10. And if we do these 5 things, 5 bits of numbers followed by 5 bits of discussion, we're going to pick up some healthy marks. If you'd like what you see, and you think that I can help you with your FM studies, please contact me. Email me at rob@keepstudysimple.com or text me on my mobile. I look forward to hearing from you. Thanks for watching. Bye.